Insecticides India has recently approved a 50 crore rupees share buyback, and my colleague Agam spoke to the managing director Rajesh Aggarwal and began by asking about the buyback itself. Listen in to a chunk of that.
Yes, the company is doing fine. So there was an opportunity that we were having a credit balance and which could be used to reward the investor. So the team came to me that this is the opportunity when we can do this buyback in the month of September, and there is a possibility that that will be appreciated by the market. So there was the idea to reward. It was not the idea to build up the market. So we priced it at 1,000 rupees and we put it in the market. So I believe that yes, the investor is going to get a good reward. And regarding the cash balance, we had about 65 crores in our hand, and company is doing fine. And with our new product mix, we believe that we are going to make good money this year, which should be good enough to fund our future expansions, because we have planned about 100 crores. And again, that will be funded by the internal accruals. So company is today totally debt free, and we were having the cash balance. So we thought that let's reward the investor, and then for the internal accruals, we'll make the money in this year.
Fair enough, Rajesh. You spoke about the product mix, so let me talk about that. I want to better understand your current contribution when it comes to premium products to your overall growth, and do you have any targets in mind?
Yes, like the premium product sales we started building for last 3 years, though we are working for many, many years. So 3 years back, it was 52%, which touched 59 last year. My vision is that we should grow by at least 3% this year. And the vision is we go to 65 and then 70 and cross 70 plus in this segment. So we divide our premium products into focus Maharatnas. Focus Maharatnas are large brands, followed by Maharatnas, which are little smaller, but the contribution is similar. So the idea is, like, we believe that the market is waiting for the new generation products. If we can put them into the market, show the advantage to the consumer, then yes, consumer is ready to buy these products. So we are bringing these products through our R&D centers and also bringing these products through our collaboration with Japan. And these are very well accepted into the market. And as we are able to do large plot trials in the market and demonstrate to the farmer, we are getting very much popularity into these products.
Right, Rajesh, the environmental conditions at the moment do seem favorable for the entire sector. I wanted to get a better understanding of the Kharif season right now. What sort of an impact has it had on the second quarter, that is the ongoing quarter? With increased insecticides consumption, do you expect this momentum to continue going forward? From what I understand, Q1 and Q2 are your largest quarters seasonally. What can you tell us about how things are panning out in the ongoing quarter right now?
Yes, the things are doing well. Though there was a late start of rainfall, so there was difference in the time of sowing in different areas, so which means the extension of the season. Generally, the season of Kharif, it ends by middle of September, and then there is a tail season. But it looks that the entire September will be the selling month, and the tail will only start after September. So which means the extended season. It has rained well. The dams in the entire country are full. So good availability of water for Kharif, and also for Rabi. It's a good thing actually, because if we look at the previous years, the Rabi was not doing good because the water availability was limited. But this time the dams are flushed with water, which means that there is going to be good Rabi also. So Kharif also will be a positive signal because the season is continuing and there is good demand across the country mostly. And this is going to continue, this momentum.
Also, Rajesh, with the destocking trend influenced by China's market behavior right now, have you observed any signs of revival or stabilization in demand?
Yes, if we look at India as a whole, the prices have corrected. They have come to the stability mode, also in China. So the large price inventory in India is also finished or near to getting over. So which means that the market has stabilized now for almost all the products. The market prices have come down a little, so which has impacted the growth in terms of value. But in terms of volume, that yes, there is a good demand. So this year you will find that there will be good increase in the volume. The value increase will be a little lesser than that. But since we have changed the product mix, so it will lead to good profitability increase. So we believe that we are going to have about 5 to 10% of value growth, but the volume growth will be somewhere around up to 20%. So that's the vision, particularly for the premium products.
Right. So, Rajesh, we also wanted a little bit of an understanding in your Dahej expansion. When is that capacity going to be completely on stream, and what sort of contribution can it eventually bring to your top line?
Yes, the hedge is entirely ready for getting started. We have set up about 100 reactors in the hedge unit, and we are waiting for the final approvals, which are expected to get cleared in the month of September. So we'll start with the trial production, and since it is going to be a festive month, so we have to go for the annual shutdown for the entire plant to complete the thing. So it will be fully operational from December. It is bound to contribute something around 150 crores in the first year, because there will be a lot of backward integration activities which are not going to contribute on the top line, but they will contribute on the bottom line. So we'll start certain new AIs by this unit. We'll expand the capacity of certain AIs by this expansion, and also do backward integration. So this is going to be a big advantage to the company, which should be visible in the next fiscal.
Right, and a final question then, Rajesh. Can you give us an idea about what you're expecting in terms of top-line growth? And are you also expecting to maintain margins at 11% in the ongoing financial year?
Yes, the bottom line growth, the top line growth in particular is expected to be somewhere around 5 to 10%. The bottom line growth will be better. So we have done 10.89 in the Q1. I believe that in Q2, I should be able to maintain that. And if the things go as they are, so should be able to sustain in the full year also. And in the year to come, because we have already made the investment in the expansions, the new products are on their way, and the products which we have launched recently, they are also doing well. So looking at that, I believe that we'll be able to continue our mission of increasing the premium products more. And if not this year, next year, we should cross 65% out of the premium product, which will mean another 150 basis points jump in the bottom line in the next year.